Grayscale beats the SEC. We see a massive reversal in Bitcoin's price action. The double top that we were seeing here seems to be distorting, and 26k has held as support. And in this episode, we're going to be talking about whether or not this is the end of the Bitcoin correction and what to look out for going forward. Subscribe to the channel for more videos like this in the future, and let's dive right in. A complicated August throughout this month. 16% downside for most of the month, and in the very end of the month we see a 9% rebound to the upside after we have a fantastic catalyst. But earlier this month I talked about how we were seeing the bull market bullish momentum indicators, the moving averages, get lost as a support, and we were talking about even on this channel that these might be revisited as a new resistance. We see that the 26k support is holding quite nicely, and what that means is that all this volatility that we've seen over the past few weeks, with this recent rebound, if we manage a monthly close above 27,200 roughly speaking, then all this volatility would be just a downside wick like we've seen in the previous months many times before. Let's see how the monthly candle closes, because still we might see some volatility towards the downside, especially if we see rejection from these bullish momentum moving averages, which need to be reclaimed as a new support for further upside. Of course, zooming out, it's always important to maintain the long-term perspective. Really important to keep this long-term perspective in mind. We have seen a break of the multi-year downtrend, very much like we saw in the past, and now Bitcoin is in a macro uptrend. It is in a new bull market, but we still have to focus on the shorter time frames, because in the longer term we are bullish. In the shorter term to mid-term, it's still not clear, because we need to focus on this lower high resistance right over here, and we know that we've rebounded from the 26k region. We've been talking about this lower high resistance for a while now here on the channel. We know that 200 MA is just above price right now. It is acting as a resistance, and we know that the bull market bullish momentum moving averages are also acting as a resistance. But we're seeing a clear forming of a potential structure right now with this new higher low. This new lower high resistance, we've known about it for a while, but this is now a new higher low that may be forming right now, and it's all about how Bitcoin now behaves relative to these moving averages. Because if we reject from here, then we could see a situation like we saw only a week ago, and we'll probably return still to this 26k region and just hold there once again for a while. But this Grayscale news is fantastic news for the long run, because it does bring things closer in terms of an ETF approval down the line. So holding this as a support, these moving averages, is what's needed for Bitcoin to be able to reclaim them as a support and then rally in towards the lower high resistance right over here, which is just above 28k. In fact, maybe even 29k, which is the lower high resistance. And it's at this point where we really need to focus on a breakout, because you've seen FOMO wicks beyond this resistance, and if we manage to revisit this lower high resistance, then FOMO wicks could occur like we've seen so many times over the past few weeks beyond this resistance. But what we're going to need to see at that point in time is a weekly candle close above that lower high resistance, just to confirm that we're breaking this as a resistance and then pulling back into it to turn it into a new support before fully confirming the breakout to new highs. However, in the midterm, or at least in the interim, these are the moving averages that need to be reclaimed as a support before we can think about this lower high. And for the time being, this 21-week moving average is still acting as a resistance, and the 200-week moving average is acting as a resistance. And it's really important to just focus on this for a moment, because we've seen the 200-week moving average, this orange moving average, act as a resistance before. We've also seen it act as a failed support before. So it's really important that we get a reclaim, because right over here we deviated below the 200-week moving average, held these moving averages as a support generally speaking, managed to break back above and reclaim them on shorter time frames. But for the time being, We need to see them reclaim as a new support, and these two moving averages right over here continue to figure as a new resistance going forward. But nonetheless, all about the monthly close right now. Let's see if Bitcoin can close above 27.6 or at least 27,200, because this would protect this level. We'd still maintain it as a support, which is positive news. Even this downside wick is a higher low relative to this downside wick, so potential positive momentum there. Need to monthly close above this level. That's the key thing. But what about the double top formation? Because we've been talking about this for a while. This was one part of the double top, and this was a part of the double top. But if we're not being able to reclaim these moving averages as a new support, then this may not be too big of a distortion for the double top. So those EMAs really need to be reclaimed, because otherwise they could reject price and we'd return to the 26k region. And would this be a very distorted double top? Not necessarily if we get a downside or at least an upside wick against those moving averages. So it all really is in the balance. Let's see how the monthly closes. Let's see how these weekly candles react to these moving averages going forward. But we know that the long-term perspective is bullish. Bitcoin is in a new macro uptrend. Whether there's a bit more downside still to be seen. This Grayscale news is fantastic news, but could there still be a bit of downside? Let's see if there's additional negative catalysts that could actually support price rejecting from those bullish EMA indicators. But of course, we also spoke about how the 4-year cycle is an important part of all of this equation for bullishness, part of the halving, and how the halving forms the 4-year cycle. So if you haven't checked out my video on the 4-year cycle, check it out in the top right hand corner, and I'll speak to you in the next one. Speak to you soon.